Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And folks, this one has some serious Bitcoin flavor to it. Get ready because we're diving into Cantor Equity Partners I Inc.'s latest filing, and let's just say it involves a whole lot of cash, preferred stock, and yes, even some Bitcoin. What exactly are they up to and what does it mean for their future? Let's find out. Okay, so what we have here is a report from Cantor Equity Partners I Inc., or as they call themselves, CPO. This report is all about a big deal, a business combination agreement that they previously announced. Think of it like a company merging with another company, or a special purpose acquisition company, or SPAC buying another business. Here, CPO is involved in making something called a business combination happen. This filing is primarily to update us on some financing that's happening alongside this big deal. We're talking about CPO, which is a SPAC, and they are merging with a company called Pubco, which is BSTR Holdings Inc. So CPO is essentially raising money to buy Pubco, and this filing details a few key parts of how they are financing this acquisition. It's like getting all your funding sorted for this massive company handshake. Now let's cut to the chase. They've been busy. Specifically on August 25th, the same day this report is dated, CPU and Pubco entered into some new agreements for what they're calling an August Pro stock private placement. Essentially, a bunch of investors agreed to buy about $0.005 million. This is on top of earlier deals where they also sold preferred stock. What is preferred stock? Think of it like a special kind of stock that gives certain rights, often a fixed dividend, before common stockholders get anything. Here, the total value of this deal is around $41.05 million. This is on top of earlier deals where they also sold preferred stock. They're also selling their own shares, CP Class A, ordinary shares, to raise money. Back in July, they announced they were selling 40 million of these shares for $400 million total at $10 a share. And then get this, part of that deal involved investors buying CPO shares using Bitcoin. Yes, you heard that right, Bitcoin. They're taking a specific amount of Bitcoin and converting it into shares of CPA, with the share price tied to the Bitcoin price. And it doesn't stop there. There's another deal involving investors buying something called Neutral Class A interests, which are also paid for with Bitcoin. So if you hold Bitcoin, you could essentially swap it for ownership in this new combined company. It shows a real embrace of the crypto world in their funding strategy. Beyond shares, they're also issuing convertible senior secured notes. These are basically loans that can be turned into stock later. In July, they raised $500 million with these notes, and then in August, they raised another $30.5 million. So we're talking hundreds of millions of dollars being raised through these different investor agreements. Now, here's where it gets interesting with these options. The investors who bought these notes and preferred stock earlier had options to buy more. Think of it like a coupon to buy more shares or notes at a set price. Some investors took up these options. For example, with note options, about $34.87 million were also exercised. This shows continued investor confidence and commitment to the deal. All these deals, the notes, the preferred stock, the Bitcoin transactions, they are all tied together in this larger business combination. The filing mentions that the closing of these various private placements is dependent on all the conditions in the main business combination agreement being met. So it's all connected and everything has to go right for the whole thing to finalize. The company is also letting everyone know that they plan to file a lot more documents with the SEC. This includes a registration statement and a proxy statement. These documents will give shareholders all the details they need to vote on this business combination. They're basically saying, hey shareholders, pay attention to these upcoming documents because your vote matters. And here's a crucial part. They're emphasizing that the SEC hasn't approved or disapproved of this deal. They are carefully stating that any claim otherwise is a serious offense. This is standard language to make sure nobody gets the wrong idea about regulatory endorsement. They're also outlining who might be considered participants in getting the shareholders to vote for this merger. This usually includes the company's leadership, like directors and executives. Their interests in the deal will be laid out in those upcoming filings. Now, like most of these reports, there's a big section on forward-looking statements. This is where the company talks about their hopes and expectations for the future, but they have to include a disclaimer. They're essentially saying, we're telling you what we think will happen, but there are risks and things might not turn out exactly as we predict. This is a necessary legal step to protect themselves from future claims if things don't go as planned. They list many potential risks, things like the deal not closing on time or at all. They also mention that the price of Bitcoin is very volatile and could impact their business severely. If Bitcoin goes down, their stock price might go down too. They're also worried about competition and the general uncertainty surrounding crypto assets. It's a pretty extensive list of what could go wrong. And finally, in the exhibit section, they file the actual form of the August Preferred Stock Subscription Agreement. This is the document detailing the terms of that $41 million preferred stock deal. So what's my take on all this? Cantor Equity Partners I Inc. is heavily involved in this business combination, and they're using a variety of funding methods, including a significant amount of money from private investors, convertible notes, and notably even Bitcoin. The company seems to be pushing forward aggressively with its plans. The fact that investors are using Bitcoin to buy into the company shows an interesting trend and a willingness to embrace new financial instruments. However, the heavy reliance on a highly volatile asset like Bitcoin is a significant risk factor. They are essentially betting on the continued strength and adoption of Bitcoin. The multiple funding rounds and the exercise of options suggest initial investor interest is strong, but the ultimate success hinges on the business combination closing successfully and the combined entity performing as expected. The risks they've outlined are real, especially those tied to cryptocurrency markets and regulatory changes. In conclusion, SIPO is in the midst of a major strategic move, leveraging both traditional and crypto-based financing. While the involvement of Bitcoin is certainly attention-grabbing, the company's future health will depend on its operational execution and its ability to navigate the volatile crypto landscape. What's your view on this Bitcoin-fueled merger? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights like this. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next one.